third episode of Ask Ale, where I do my best to answer your guys' questions. In today's video, we got questions like, what is the best stock in the entire market? How do I feel about the current economy? Do I limit my stock positions? And a lot more. Stay tuned. What's up, everyone? My name is Ale. Welcome back to my world of stocks. We've got a lot of questions here that were posted in my last community post on YouTube, so let's go ahead and start running through some of them. Question number one comes from actually a few different people that asked about my Van Damme intro, but let's go with this one here from Ton Lars, who asks, what's the story behind the Jean-Claude Van Damme intro? First of all, great job spelling it correctly. That shows me that you are a true Van Damme fan just like me. But in all seriousness, I just grew up watching a lot of Van Damme. He was my childhood action star hero, I guess you could say. I actually used to own every single one of Van Damme's movies on VHS. I was a very big fan. I'm also a very big martial arts fan in general. Done a lot of jiu-jitsu and kickboxing growing up, and I still do. I actually go to UFC gyms, and I actually have the premium membership where I can go to any UFC gym, and I can even bring a guest with me. So it's a lot of fun. I go and I do jiu-jitsu, I do kickboxing, different stuff like that. And in terms of the intro itself, I really like the intro song that I use for my videos, and it's kind of an upbeat song, so I wanted something a little kind of goofy, up-tempo, something where someone was maybe dancing in a kind of lighthearted way. And that Van Damme scene is from Kickboxer, the movie, where Van Damme is drunk and he starts dancing. And that clip actually fits perfectly with that song because Van Damme claps along to when the drums hit in that clip of the song that I put in the video. So it just fits perfectly. I think it's a little goofy. I think it's lighthearted. I think it's up tempo. I think it kind of lightens the mood and lifts the spirits up a little bit. And I just think it's a great way to start some of my videos. So that's why I like using it. By the way, another viewer asked a question similar, and they asked if Kickboxer is my favorite movie because of that scene. And Kickboxer is actually not my favorite movie. It's not even my Van Damme favorite movie. My favorite Van Damme movie would be Bloodsport. That's a classic. And I also really like The Quest and a few others as well. Double Impact is another good one too. But favorite movie of all time is actually Zoolander, which I know is a little funny, but that's such a well-made movie. It is extremely funny. I just think that movie was perfectly made. Every scene is hilarious. Everything is so well done, and it has some of my favorite actors like Owen Wilson and Ben Stiller and Will Ferrell and others. So great movie. And yeah, that's my answer to question number one. Question number two comes from Stock Invest, who asks, top stock in the market right now, which in your opinion will outperform the major US indexes during the next 5 years. Well, it's too difficult to say which stock will perform the best over the next 5 years because that'll probably be a highly speculative, high risk type of stock, one that will skyrocket based off of hype. And that's something that is very difficult to predict in the short term, even medium term. It's difficult to know when a ton of hype will enter a stock and it'll just really shoot up in popularity and skyrocket in value and in price. And it'll probably also be a smaller cap company and stock. So ones that are maybe not so much on your radar, it's just a difficult thing to predict. But if you were to ask me which stock looks the most attractive right now in terms of the price that it's trading at, in terms of its value, its growth, its business, how they're financially performing, their market dominance, everything, kind of the overall picture, what is the most attractive stock right now? It's Google. It's hands down Google. Google is such a dominant company. They know virtually everything about you. They have their hands in anything that is internet related, almost anything. And they are going to be one of the biggest players in AI. They've got so many things going for them in social media, digital advertising, everything internet related. And it is trading at such a dirt cheap valuation. We're talking about a PEG ratio of well below 1, which is really good for any company, let alone a giant behemoth like Google that is actually still growing at some very surprisingly impressive rates. This is a very good stock at today's prices, and it's the stock that I've been buying the most of recently. So overall, best stock right now, I would say Google. Of course, they don't pay a dividend, so if you're a dividend investor, yeah, you're probably not going to like Google as much, and you might be looking elsewhere. But in terms of just overall, for me personally, the type of investor I am, long term, in terms of safety, quality, in terms of just buying something that is undervalued, where the valuation cannot last at these low levels. It's got to go up over the long term. I would say, my opinion, Google number one in the market right now. Question number 3 comes from Oreo25, who asks, do you and Jeremy still call each other on your tablets? Now, this is such a funny question here. And by the way, this viewer must be a longtime viewer, because it's actually been a few years ago, I made a video on my YouTube channel, and I was still a very small YouTuber, and I made a video reviewing Jeremy's stock portfolio. Jeremy, of course, from Financial Education, the Financial Education YouTube channel. Now, if you guys don't know Jeremy, I don't know what your perception or your vibes might be from how you see him online and stuff like that. I'm a big fan of his YouTube channel. I'm a big fan of him in general. But I will just tell you that Jeremy is one of the nicest people that I've ever met, extremely humble. Again, I don't know what kind of perception you guys get online, but I can tell you myself that I met him in person, and he is one of the nicest, caring people. And I was a tiny YouTuber at the time when he reached out to me, by the way. It's not even like I was a tiny YouTuber and I reached out to this really big YouTuber. No, he reached out to me. He was extremely nice, offered me help, said, is there anything, he's someone who believes that a rising tide lifts all boats. So he just wanted to reach out and help anyone in the financial stock market YouTube area. Such a selfless thing to do. A great guy. I can't say enough nice things about him. Anyway, I made a video. Again, I was a small YouTuber, and I made a video where I was reviewing his stock market portfolio, and he would do this thing. I don't know if he still does it, but back in the day, he used to do this little skit in some of his videos where he would pretend to call like a CEO, or he would pretend to call Warren Buffett or someone like that on his iPad. So he'd lift up this like tablet, and he would make a phone call on it, which obviously it was like a fake phone call, but he would do that. And so in my video reviewing his stock portfolio, I did a little twist on it, and I pretended to call him with my Surface tablet, which is this big tablet. So you can imagine me, going like this and making a phone call with it. And so I asked Jeremy, I reached out to him, I texted him, I said, hey, would you be willing to do this skit for me? And would you record this and send this to me? And he was so nice about it. He sent me, and in fact, if you want to know how nice of a person Jeremy is, he recorded something for me and sent it to me. And there was some mistake in it. I think maybe he was using a phone instead of a tablet or something. And I asked him to re-record it, and he re-recorded it and sent it to me again. Like a big YouTuber doing this for a tiny YouTuber. You have to understand, this is a very selfless thing that he does. But anyway, so he sends that over to me, and we do this skit where I pretend to call him. And in my video, I say that I'm like a big shot, and I say, oh yeah, I talked to all these big shots. Like I talked to Jeremy, this big YouTuber. He knows me. I'm gonna ask him for permission to review his portfolio, and I call him, and then he acts like he doesn't even know me, and it's just a funny skit. If you guys want to watch it, I will link the video down below. Just don't make fun of me too much, because that was back in the day. The quality of the videos weren't as good, but I think it was a really funny skit. A lot of people really loved it. And I'll link that video for you down below in case you want to watch it. But to answer the question, unfortunately, no, I haven't talked to Jeremy in a little while. I hope he's doing okay. I should probably reach out to him soon, but maybe one of these days I'll give him a call on my tablet again. Question number 4 comes from Something Helpful, who asks, let's see if I can phrase this concisely. For someone who doesn't have a mature portfolio yet, would you advise them to focus on building it out one position at a time, or slowly building multiple positions at the same time? Okay, so you phrased it perfectly, by the way. I totally understand what you mean. I think both methods are mostly okay, but I'll dive a little bit deeper in just a second. First, I want to say that if you are starting out, I think the more important thing is to just buy slowly in small amounts over time. And the reason why is because if you're just starting out in the stock market, you're not a mature investor, you're very early on, I don't want you to get discouraged by seeing your stocks go down. Right now, the economy is very shaky. The stock market is super volatile. We don't know if we could be going into recession at some point, rising interest rates, rising inflation. There's a lot of a lot of headwinds, I should say. So a lot of reason to be careful right now. And if you just are starting out and you buy some stocks right now and they start going down because the market is so volatile right now, I don't want you to get discouraged by that and then sell out at a loss and then never come back into the market. Buy in small amounts so that if the stocks go down, you can buy heavier and lower your cost basis. If you're a more mature investor, you've been in the market for years, you're not likely to see your overall positions down in the red because you already have such a low cost basis because you've been buying these stocks for so many years. For example, Tesla is one of my biggest stocks. Even after all the crashing that Tesla has been going through recently, I'm still up over like 1500% on my position. It's very unlikely that I'm ever going to see Tesla in the red again. And one of the funnest things, actually, for an investor like me that invests long term, is actually seeing my stocks in the red, because then I get to buy more and I know that I'm getting a good value, because if I liked it at $100, I should love it at 90, I should love it at 80, and so on and so forth. As long as you still love the company and you still like what you're investing in, all that kind of stuff. So anyway, buy in small amounts when you're starting out, slowly over time. If the stocks go up, you can decide to buy more, or you can let it go up on its own. You're not going to be depressed about a stock going up, but if the stock goes down, you might get discouraged. So make sure that you're able to buy more if it goes down. So buy in small amounts over time. Now, to answer your question more specifically, should you start out with just one stock, or should you buy multiple stocks when first starting out? I would say that it's better to buy multiple stocks. Not too many, because you don't want to overwhelm yourself, but if you're just starting out, focus on an area that you're experienced in. So say you play a lot of video games, maybe look at video game stocks. You like a lot of technology and social media, internet, stuff like that, maybe look at Google or certain companies like that. If you do a lot of online shopping, maybe look at Amazon. Focus on businesses that you will understand, research the companies, research the stock, make sure that it's a good value, make sure that you're sure of what you're buying, and buy a few of them. Buy 3 to 5 different stocks and buy them in very small amounts. And then guess what? When you own multiple stocks like that, whichever ones fall, you can pick and choose what you want to add more to. So say 2 stocks fall and the other ones stay flat or whatever, then if the 2 stocks that fall, if you still love them and they fell and you think it's an even better price, then you can go ahead and buy more of those 2, and you don't necessarily have to buy more of the other ones. So you can kind of pick and choose which stocks are at a better value, because I'll tell you right now, when you have a portfolio of several different stocks and you're diversified, some of your stocks will be overvalued and some of your stocks will be undervalued, and you want to be able to buy more heavily of the stocks that are undervalued at specific times. So don't go too crazy, but buy a few different stocks and focus on them. And when you see some of them falling and you still love the business, you think everything is still intact and you think it's an even better value, go ahead and add some more of those. And I would say do it that way. That's what I did when I first started out in the stock market, and I think it served me pretty well. Question number 5 comes from Marcus Gustafsson, who asks, "Hey Ale, I'm curious what you think about EV charging station stocks like ChargePoint, EVgo, Blink, and so on. I think there is an EV revolution going on, but the infrastructure is still missing. We are missing charging stations, and there is strong demand for them. And I think it's a good opportunity to start investing in charging station stocks. What do you think?" Yeah, I think it is super tempting to invest in EV charging station stocks. Many of these stocks have fallen by huge amounts recently, coming off of all of the EV hype, the height of that. And we're seeing a lot of them that are still growing at some really high rates, and there's a ton of potential for them over the long term. I really see a future where apartment buildings, office buildings, markets, malls, schools, all parks, beaches, all kinds of different places having charging stations for electric vehicles, especially with the big, climate change movement and how political that's become. And I think there's a lot of government incentive and a lot of government funding for these type of things. I think the spending is going to be huge. There's going to be a lot of money to make from the EV revolution, and these companies are going to have plenty of market space to make a lot of money. So you take a stock like ChargePoint, for example, who commands the most EV charging station market share. I think in North America, they have like 70% of the market, and their stock is currently down like 70% from its highs around the start of last year. And yet their sales grew by more than 60% last year and are expected to grow by another close to 100% this year and over 50% next year as well. So very high growth. However, the problem with these stocks is that most of them are unprofitable with sky-high valuations. In the case of this market leader in specific, they've been losing hundreds of millions of dollars over the years, and sometimes they even lose more money than they bring in sales. And despite the massive crash, their price to sales ratio is still pretty high at over 13. That's after they lost, 70% of their value. So even with the high growth, it's going to take many years until they get closer to a PS ratio of around 1, which is typically considered good. It doesn't have to get that low, but obviously a company like this could be somewhere maybe in the single digits. That would be a much better value. And the result of that is that this is not a bad stock, but it is an unprofitable one with a high valuation, and that makes it a speculative stock. So you just have to know what you're investing in, what you're buying here. It's a speculative stock, it's high risk. If you're in the market for a speculative stock, these are very attractive ones to look at. I personally really like ChargePoint. If I was in the market for a spec stock, I would probably buy some ChargePoint, but I already own too many spec stocks. So I really don't want to add any more right now, but it's very high up on my watch list, and I will probably be talking about it more in future videos because I'm a little bit on the fence with it. I may buy it at some point, but right now I'm still debating it a little bit. Okay, now for question number 6, I'm actually gonna combine two questions here because they're so closely related, but one comes from Rafael Mungaya. Sorry if I pronounced that wrong, but he asks, a looming recession and your thoughts, opinions on how the US economy will look like these next couple of years. And the other question comes from Tony K, who asks, is it a good time to buy stocks now? Will you consider shorting stocks? Okay, so starting with the first one, I've actually shared my thoughts on a lot of this in recent videos, so I'll just keep it very short here. But in my opinion, and you guys should know this from recent videos, I think the economy is absolute trash right now. I am very pessimistic about the economy. I think that the lockdowns really damaged the economy a lot. I think people underestimated how much damage it can do. I don't want to get political on it. You guys can have your own opinions on what we should have done, what we should do, whatever. The point is that the economy is just not that good right now. We've got rising inflation, rising interest rates. The economy, I'm not sure it can be sustained this way. A lot of people don't even want to work. There's so many things that we could go into with the economy, but I just generally don't think it's looking very great. Having said that, the stock market is doing what it should do. It is crashing. It is falling. That's what it should do. The economy is not looking good. The stock market needs to reflect that. If the stock market was still trading where it was, last year when it was, in my opinion, in a bubble, I would be very concerned and I would be very skeptical about buying stocks. But it's not there. It's fallen by a lot, and many stocks have lost a ton of value. I've been putting out videos on stocks that I think are on sale that have lost 50%, 60% of their value. I mean, stocks that have lost more than half their value. Stocks are crashing, okay, left and right. I see it all the time. And as a long-term investor, what am I supposed to say? I like that. I like it when stocks go down. As long as I have a steady job, steady income, I'm going to be buying stocks because I'm a long-term investor. It's just what I do. I like to buy stocks when they go down, get my cost basis as low as possible, and then ride up the recovery. Sure, you can criticize me for not timing the market, but you know what? I've never been good at it. If you're good at timing the market, God bless you. I'm happy for you. Do what you want to do. But I'm not good at timing the market. I've never have been, and I've had a lot more success just investing long term. When I see a good value, I buy the stock. Right now, for example, I think Google is at an amazing value, and I'm gonna buy it long term. I think 5 to 10 years out from now, I'm not gonna really care what happened here in the short term. I think 5 to 10 years from now, the stock is gonna be much higher than where it is today, and I'm gonna be happy that I was buying the stock. Will stocks go lower? Sure, of course they can. But that doesn't concern me. As long as I have the income, as long as I spend money that I don't necessarily need, then I can continue to buy stocks the more that they fall and just buy heavier and do it that way. So I am still buying stocks. In answer to the second question, am I shorting stocks? No, I generally don't short stocks, and I don't have anything against that. You guys can do whatever you think is best, whatever strategies you like. But I just think that shorting stocks is a little bit riskier, especially with some of the gigantic short squeezes that we've seen in recent history. So I generally just stay away from shorting stocks. I like my strategy. I have fun investing in stocks long term. I know I have a YouTube channel. I know that technically this YouTube channel does make some money. It really doesn't make much money, but I know I have this YouTube channel. But I invest in stocks because I enjoy investing in stocks. It's fun for me, and it's fun to buy stocks, and it's fun to invest long term. That's what I like doing. So people will criticize me for my methods, and people will criticize me for being a long term investor and for buying stocks during a bad economy. It is what it is. It's what I like to do. And long term, I do just fine. Long term, I sleep just fine. So I'll be fine. But that's what I do. Just to answer your question, a good question. And that's my answer. Anyway, I hope you guys enjoyed this. It was fun for me. I enjoyed answering your guys' questions. If you have any more questions, leave them down below. I'll probably also do some other kind of post or something to get more questions in the future too, but feel free to drop them here as well. And in any other video, I'm always looking at your questions and I'm always trying to reply to just with my keyboard. And it always influences different videos that I make as well. So a lot of times I make videos just because you guys ask me to make those videos. So anyway, thank you for stopping by. Thank you for supporting the channel. It means the world to me. I will catch you in the next video. Take care. Bye-bye.